In this video, we're going to talk about Venco Ventures, trading under the symbol BBIG. So far, it's been a great run for the stock, and we're going to talk about the future prospects and what my opinions are regarding where the stock may be going. But before that, I want to talk about the mindset that we must have when trading stocks like BBIG. Because this is, in my opinion, one of the most important things to keep in mind when trading in the stock market, period, and more importantly, trading this kind of stocks. So in my previous video, we talked about BBIG, and a lot of people disliked it, partially because I wasn't very clearly bullish about the stock, and also because I didn't pay that much attention on the fundamentals of the company. So I'd like to clarify why I thought that the stock needed to be treated carefully back then, and why do I still believe that this is still very relevant now. First of all, we have to call the stock for what it is, which is really a gamble, a speculation. I know that not everyone will agree with me on this, but I don't think that buying in a stock, playing on either NTF, or betting on its platform to dominate the Indian market are reasons that are good enough to start pouring money into the stock. Even less so if it's Reddit telling me that they're going to reverse the short interest on it or to trigger a short reversal. It doesn't mean that it's not going to happen, but they cannot be the main reasons why do I want to pour in money into the company. So BBIG is a stock with a lot of short interest. It has the attention of the online community, made mostly of retail traders, and the stock price surged after a sudden announcement of merger regarding their video platform. I checked around on the internet for references about the company regarding anything that was said before when they announced the news about the video platform, and so far, I didn't find much. I found some very isolated cases where people were like, hey, you know what? There's a lot of short interest on Venco. Maybe we can have a play in it. But it doesn't mean that people began to really talk about it before when it actually surged. So, in a way, it's kind of similar with a lot of other stocks that we covered on this channel. One of them that comes to my mind is Bionanogenomics or fuel cells, or even, I'm sure that you've heard about this cryptocurrency called SafeMoon. People started to put their focus on these assets when they realized that there has been a surge, and then they generated a lot of arguments to prove that the bullish trend isn't over, or that the bullish trend has yet to come, and that there will be a lot more money to be made. Now, in the case of BBIG, there was another element to be considered, and that is the speculation of a short squeeze. Basically, if the stock has a large existing short interest and that it is pushed higher, the stock positions should have to recoup after a certain period of time, which will result in the stock going even higher. It's not the best definition of a short squeeze, but for me, it does get the job done. Please let me know down in the comments if you think that it actually meant for something else. So now that we covered the basics about the stock and the circumstances around the price increase, let's talk about how should we treat all these information. I think that when trading a stock that is considered mostly like a meme stock, with a large retail following who are trying to repeat the miracles with GameStop or AMC, making them profits and getting back to the big sharks, we have to deal with it like we have to trade by assuming that either scenarios can happen. Sometimes they're right, like it was the case during a certain time for GameStop. It really depends on when you actually bought those shares. If you bought those shares early in the mix when very few people were talking about them, or when the stock already gained attention, and in this case, it either keeps going up or you will suffer like a very slow grind over the next few weeks, right? So there are a lot of researches and posts arguing for or against whether a stock will keep going higher or go through massive corrections. And I would say that overall, regardless of what experts will say, the real honest answer is we don't know. Whoever who can predict with certainty that the stock is going to go in one particular direction based on the fundamental information that is publicly available, which includes the ratios of short interests and so on, they are fooling themselves at least a little bit. At least that's my opinion. Like, I think that they're hoping for their wish to be equal to the reality. Sometimes it's the case, but it's also often not. This is why my reaction at the time, which I still maintain now, is that the stock may go higher, in which case we will have to have a foot in the door in order to benefit from the actual price surge and to have enough room left to buy more shares if the stock dips down. Don't forget that even before maximizing your profits, your number one priority when trading is to safeguard your capital. And that includes to be careful when trading very volatile situations, like trading Venco capital. So looking back at what happened so far, it seems like it's scenario number one that occurred. But right now, there is a very heavy tendency towards going lower based on the price action formation so far. And it usually means that the stock has a lot of downward pressure, and frankly, there should be somewhat of a pullback after such a bullish week or so. So that is what I would like to explain in this video. I think that when trading meme stocks, you have to be very aware of the environment and how fast the circumstances can change and how much risk you're willing to stomach for the sake of your account balance. There are still many opportunities to make money in the current stock market, but there are also many, if not a lot more, opportunities to lose your money. The difference is that once your money is lost, it's not really coming back, whereas profit opportunities will always be there. So with that being said, I think that for the upcoming few weeks, Venco Ventures is probably going to go through some period of limbo after the surge. And this can provide a good opportunity to enter in the stock and to add to your position. Now, be very careful. I would recommend to keep your position within 1% of your portfolio. Don't go overboard, because not only you will leave your portfolio overextended or overexposed, it'll also affect your psyche when trading other stocks. Like, you will always want to come back to this chart looking to see if Bbig increased or decreased. It shouldn't matter to the overall picture. So that is the mindset that you have to keep when trading stocks like Bbig. So it's really up to you. I would say that at least for the upcoming next few weeks, you should expect the stock to correct itself. But if you don't have a position in it, definitely have some shares of Bbig so that you don't have to, regret that you've missed out on something. If the stock goes from, right now it's like around $7 or $8, if it surges to like 15, you're not gonna regret. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.